Welcome students to another lecture in the series. In this lecture we will be trying to wind up with the head income from salary. Let us complete the provisions first of all, then we will practice certain questions. First thing that we are about to study in this video lecture is the permissible deductions from salary income. The income which is chargeable under the head salaries is computed after making these deductions. The very first in this is the entertainment allowance deduction that and professional tax. Okay, but before that, first thing we provide is standard deduction, and standard deduction is available with an amount of rupees 50,000, but for the assessment year 1920 till 1920 it was 40,000 or the amount of salary whichever is lower, but then assessment year 2021 onwards it has been increased to 50,000 or the amount of salary whichever is lower. Then another important allowance, that is a permissible deduction, that is entertainment allowance. As we have already seen this in the previous videos, that an entertainment allowance is first included in the salary and therefore thereafter it is provided as a deduction in accordance with the rules that we have studied. Then further, professional tax or tax on employment. It is levied by the state under Article 276 of the Constitution and is also allowed as a deduction, and it is available only in the year in which that professional tax is being paid, and all these three are available under section 16. Then further, entertainment allowance, let us see that in bit detail as it will be used at different points. So entertainment allowance is first included in the salary income, as I have informed that in the previous slide also, under the head salaries, and thereafter deduction is given on the basis in this way that we are about to study. So first case, in the case of government employee, means government employee refers to central government or state government employee. In that case, these three conditions are there, and the least of these three would be followed: either 5,000 or 20% of basic salary or the amount of entertainment allowance granted during the previous year. So in order to determine the amount of entertainment allowance deductible from salary, we need to consider these few things. First is, like, for the purpose of salary, it excludes any allowance, benefit or any other perquisites, and the amount actually expended towards entertainment out of the entertainment allowance which has been received is taken into consideration. And this was the case for the government employees, and for the non-government employees, including employee of any statutory corporation or local authority, entertainment allowance is not deductible. Let us have a look to this question. Person X, who is 40 years old, is employed by a private sector garment manufacturing company and gets rupees 75,000 as monthly salary. The company has provided him a car which is 1400cc, which is used by this person X partly for the official purpose and partly for the private purpose. The company reimburses the entire expenditure, which approximately comes to rupees 80,000, and it also includes a salary of rupees 9,000 per month of the driver with effect from January 10, 2019. Besides this, he is getting house rent allowance of rupees 6,000 per month. The rent paid by him for taking a house on a rent is 6,500 per month. Then further, he has purchased from the company's showroom some garments of MRP rupees 20,000 at a discount of 93% of MRP. It is there as per the service rules. So production cost of these garments is 45% of MRP. The company deposits a sum of rupees 1,20,000 in the public provident fund account of X out of its pocket. Then X has also contributed a sum of rupees 40,000 towards the purchase of national savings certificates during the financial year 18-19. So we need to find out the net income and the tax liability of this person X for the assessment in 1920 on the assumption that income of X from other sources is also there, that is for 2,40,000. As we have to perform the calculations for the assessment year 1920, this means that we have to work out for the year 18-19, means starting from 1st of April 2018 to 31st March 2019. Let us have a look to the solution. First of all, we will have a look to the salary, that is basic salary. So 75,000 is the monthly salary, so 75,000 into 12, 9 lakh is the annual basic salary. Then comes your motor car. Motor car, because it is of 1400cc, so up to 1600, the allowance that is there is 1800, so into 12, 21,600. Then for driver it is 900 allowed as per the rules. So 900 into 2, it would be 1800. Why? Because the driver is appointed later in the year. Then further, the person is getting an house rent allowance, that is 6,000 to 12, and no exemption is available because the rent paid by him is less than 10% of his salary. Then purchase of garment at discount. For that, what we would do, we would check out that purchase price is 7% of rupees 20,000, whereas the cost of manufacturing is 45% of this. So the difference is chargeable to tax because that is a kind of an earning for the um, that person X. So the further that the amount is deposited by the employer in PPF 1,20,000. It is his income, but later on he can avail that as a deduction under section 80C. We will see that. Then gross salary, but first we will include it in the income. No. So from there we are able to obtain the gross salary. Then we can provide the standard deduction because this is a case of year 18-19. So standard deduction would be 40,000. 19 onwards it is 50,000. We have just studied that. So his income from salary is 10 lakh for 83,000. Other incomes that we have given in the question, that he is having income from other sources, other heads, is 2 lakh 40,000. So in that case his gross total income is 13 lakh 23,000. Then further, the deduction under section 83, we do have PPF 1,20,000, NSC 1,40,000. Total is coming out as 1,60,000, but the section 80C is deduction can be provided subject to a maximum of 1,50,000. So we can deduct 1,50,000 only and not beyond that. So in that case, his net income is 11,73,000. Then further, we can calculate as per the slabs. We can calculate his tax and provide the health and education cess also at the rate 4%, and the tax liability can be calculated by rounding it up to at least ones or tens place digit. Then further, another question, let us have a look. Mrs. X, who is 35 years, is a finance officer of A Limited, Nasik. During the previous year, she gets rupees 4 lakh as salary and 1 lakh as dearness allowance. Besides, she gets certain perks and allowances, like she is getting free tea, coffee and snacks, etc. in office. In that case, employer's expenditure is rupees 10,000. Then free lunch, rupees 55 per day for 100 days, that is 5,500. Up to rupees 50 it is allowed, exempted. Food coupons, 65 rupees per day for 200 days, and these are the coupons for multiple purpose, and they are actually used for purchasing grocery even. So 13,000 is the amount. Free holiday home facility at OT. Expenditure incurred by the employer is 90,000. Market value is 93,000. The car is, there is a car also which is purchased from the company. Cost of the car to the company is 6 lakh, but it is sold to Mrs. X after 2 years and 10 months for rupees just 75,000. Further, Mrs. X contributes 15% of her salary, which comes to rupees 64,500 towards recognized provident fund. A matching contribution is made by the employer company. Mrs. X has taken a life insurance policy on her life. Annual insurance premium is 26,000. The premium for 18-19 is paid by her husband. Income of Mrs. X from other sources is 1,30,000, and it is the interest income on amount gifted by her grandfather. So we need to find out her net income and the tax liability for the assessment year 19-20. And we also need to answer a question that who can claim deduction under section 80C in respect of the insurance premium. As it is being paid by her husband, so only he can take that. This lady, Mrs. X, cannot take that. We will see that further in the solution. Let us see the solution. First of all, we will begin with the basic salary, that is rupees 4 lakh. Dearness allowance is 1 lakh that is given to us. Free tea and coffee is not chargeable to tax, so we will give it as nil, but lunch is exempted up to rupees 50, that is not chargeable to tax. Then beyond that, because the cost of lunch is 55, so that 5 rupees will be charged into 100 because it is provided for 100 days. Then food coupons would be taxable because she is buying her own personal grocery. So it will be 13,000 as income here. Then holiday home to OT 93,000. Then purchase of car. I'll explain the details of the purchase of car. It is marked as 3,09,000 while I will reach to the working note. Then employer's contribution towards provident fund in excess of 12%. You must remember that we have studied in the provisions that up to 12% it is allowed, and beyond that it is taxable. So we can calculate that for the time period that is given to us. From there we can obtain the gross salary. We can provide the standard deduction of 40,000 because this is also a case before 2019. So we are able to get the income from the head salary. Then we are supposed to add the interest income and obtain the gross total income. Further, we can provide the deduction under section 80C for 64,500, and the net income comes out to be 9,53,900. Then further we can calculate income tax on this and provide 4% health and education cess also on that. Perquisite in respect of purchase of car can be taxable in this way. So cost of the car to the company is 6 lakh rupees. The normal wear and tear for the first year, because 20% is the rate at which we provide the depreciation. So it 1,20,000 would be subtracted from it. So for the first year, written down value would be 4,80,000. So normal wear and tear for the second year also, 20% of this 4,80,000, that is 96,000. So written down value at the end of second year is 3,84,000, and it is being purchased by her in the third year. So the purchase price that she is buying is 75,000. So we will subtract it and we will be able to obtain that it is, she has earned a profit of 3,09,000. So we have shown that only here in case of purchase of car. It would be considered as her income. Then further, we do have more questions. We will continue with these questions in the next lecture. Till then, you may practice. We'll meet in the next video. Thank you.